Has gold completely flatlined? For the past 2 weeks, gold hasn't pumped and it hasn't dumped. It's been dead in the water. Even with the broader US market reaping higher last night, gold barely managed to reclaim the $5,000 level. So people are asking, is the gold bull market over? No, gold isn't that, but we have officially entered short-term garbage time. By garbage time, I mean it has no strength to rally and no momentum to dump. It just bleeds a little every day, then catches a teeny tiny beat to tease you, making you think it will read tomorrow. But instead, it's just a slow beat, dead by 1,000 cuts. So why is this happening? First, those recent fake outs above $5,200 created a massive wall of trap loans. Every time it pumps, backholders rush to sell at break-even. And second, smart money is executing a calculated rotation out of the asset. Just look at the real yield on the 10-year US Treasury. It's still hovering around 2.2%. What does it mean? It means institutions can park their cash in risk-free government bonds and sleep easily with a pure 2.2% real return. Gold, on the other hand, yields zero interest. So naturally, institutional capital is rotating out of gold and into treasuries right now. That's why gold has zero upside momentum in the short term. But why isn't it dumping? First, central banks are acting as the ultimate macro backstop. And second, Asian retail and institutional investors have an insatiable appetite for gold. And the moment it dips, physical buyers step in and aggressively buy the blood. Market makers know this, so they aren't willing to aggressively short it either. This creates the current stalemate, stuck in no man's land. The gold volatility index tells the whole story. During the peak of the run, gold's GBZ was chopping between 40 to 45%. And now it has completely collapsed to 25 to 30%. The daily ranges have gone from a wild $15 to $100 elevator swings to a painful 10 to 20 snail's pace run. Gold used to be the undisputed safe haven consensus. A single geopolitical flare-up used to trigger an instant 2% pump. A single dovish smokescreen from the Fed used to rip that $15 higher. But now, bullish news gets faded, and bearish news causes a slow bleed. Looking at ABC Market Buzz, even though gold is holding near the highs, market sentiment has completely cooled off. This sideways chop is failing to attract any fresh bids. All the liquidity and tension have rotated into crude oil. So the question is there any hope left for gold? Yes, there is an ironclad rule in trading. Extreme compression leads to extreme expansion. Before every massive directional move in gold, it has to go through this exact type of brutal volatility compression. Take last April, for example. After breaking $3,500, it chopped sideways for nearly 4 months before launching its next leg up. During this recent parabolic run to $5,600, way too much overlapping retail money piled in, the bull is too heavy. Market makers aren't going to pump it for free. Plus, gold is currently being suppressed by the massive rally in oil. So the big players have zero incentive to mark up the price right now. As for dumping it to trigger a flush, sure, that would shake out the weekends, but it would also invite a flood of deep buyers, and the institutions would risk losing their own accumulation blocks. Smart money is taking the flatline approach, killing volatility and substituting the price correction with a time correction. Those perma bull influencers will give you psychological messages telling you this is just a quick pullback before a moonshot. But in my view, that's a pure hopium. Iran hasn't called a ceasefire. Oil is stubbornly high. Just this afternoon, news broke about a tanker attack, putting a massive green candle for oil and instantly nuking global risk assets. In this macro environment, market makers aren't going to risk their capital just to bail out trade retail loans. So when will the trend actually shift? My personal macro read, the catalyst will likely be the Federal Reserve's leadership transition. Historically speaking, Fed transitions are always accompanied by violent policy swings and a massive deficit of market trust. The anxiety during this policy vacuum is the ultimate rocket fuel for gold. As for the current price action, key support levels are around $5,000 and $4,900, with the latter being a macro floor. If we tap those zones, you can start DCAING into spot positions. And upside resistance side at 5,100 and 5,200, these are major historical as in R flip zones. It's your trading leverage. This range is a gold mine for fading extremes. Short the top, long the bottom. And finally, my long-term bullish macro thesis for gold remains absolutely intact, but you have to accept the reality that we are stuck in a short-term garbage time. This dead silence is just the market calling the spring. Once this agonizing shakeout is over, gold will restart its bull run in the most violent way possible.